Beware of the greatest insider gold trade scheme ever. Bernard Baruch was one of the wealthiest speculators in American history. He started with nothing and worked his way up to becoming a war effort hero and a trusted advisor to many presidents during his lifetime. But he made his fortune speculating. The myth and popularity of another speculator during the same era, Jesse Livermore, gets much more print than Bernard Baruch. But in my books, Bernard Baruch ran circles around Jesse Livermore. I'll leave that explanation for another day. This is about the biggest bet that Bernard Baruch ever made. But not only did the US government take it from him, they tormented him for doing it. It's said that no American individual has ever held more gold in his personal possession at that point. Bernard Baruch's personal stash of gold bullion was a little over 2 tons of gold. That's over 75,000 ounces of gold. That's over $125 million in bullion at today's gold prices. He was America's first bullionaire. So what happened to all that gold? America's first bullionaire was blindsided by the president's executive order. On April 5th, 1933, 1 month after taking office, President Roosevelt ordered all Americans, by executive order, to surrender their gold at the government fixed rate of $20.67 per ounce of gold. All gold coins, bullion, and gold certificates that were par value of over $100 would have to be surrendered to the Federal Reserve by May 1st, 1933. That was less than 1 month after the president's executive order. Over 14.5 million ounces of gold were surrendered to the US Federal Reserve. Nobody surrendered more gold bullion to the US Federal Reserve than Bernard Baruch, with his stash of over 2 tons of gold. Again, that's over 75,000 ounces of gold. At the same time in Europe, the going rate for gold was about $29 per ounce of gold equivalent. The executive order to surrender their gold didn't give US citizens enough time to organize the required logistics to play the arbitrage opportunity between the US price of $20.67 and the European price at $29. Not to mention that President Roosevelt made it illegal to play that arb. Millions of Americans were forced to sell their gold at below international market rates. Here's what's not mentioned in the history books of this period. The US government made a serious inquiry into all the gold mines and gold dealers on who sold the gold, and most importantly, to whom the gold was sold before the executive order. Bernard Baruch had to testify why he bought so much gold to the US Secretary of Treasury. In fact, the president of one of the mining companies that sold their gold to Baruch also had to testify to the Secretary of Treasury and had to give his opinion why Baruch bought all that gold. I guess protecting one's wealth and the lack of trust in the fiat currency wasn't an acceptable answer in the eyes of the US Treasury Department. So, you want to become a bullionaire? Becoming a millionaire means financial freedom. Becoming a billionaire means that you're one of the 2,100 people out of the 7.8 billion people on planet Earth. It really means you're part of the top 0.00027% of the world's financial elite. Truly a rare feat. But there is a new class of elite wealth being created that I call the bullionaire class. A bullionaire is someone who's quietly accumulated over 1,000 ounces of gold or silver equivalent of that. But before you set your sights on becoming one of the global bullionaires and stockpiling a mountain of gold coins, please understand what happened to the US bullionaires in 1933. Let me tell you about the United States Gold Reserve Act of January 30th, 1934. On January 30th, 1934, after forcing Americans to surrender their gold at $20.67 per gold ounce, President Roosevelt raised the price per ounce of gold to $35 per ounce that day. This immediately booked a 69% gain on the gold that was surrendered in May 1933. Bernard Baruch was 100% correct in his prediction that gold would increase in value. However, he didn't make a penny on his gold bets because he was forced to surrender his gold to the government. And most importantly, at the government's fixed price, not the international going rate for gold, but the government's fixed rate. In fact, the whole saga cost Bernard Baruch a lot of money and was the source of much headache because he had to testify and defend himself from the government inquiry on why he bought so much bullion. President Roosevelt knew exactly what he was doing. America was in a deep recession in 1933. Famous individuals like Jesse Livermore owed millions and went bankrupt. Shortly after the Gold Reserve Act of 1934, Jesse Livermore filed for bankruptcy for a third time. Not to digress, but I mentioned earlier why Bernard Baruch ran circles around Jesse Livermore financially. Bernard Baruch never declared bankruptcy. He was a good family man and lived a long, fruitful life. 6 years later, 1940, Jesse Livermore was bankrupt for the fourth and final time, and he shot himself and committed suicide. Many popular business executives that were household names committed suicide between 1932 and 1934. That's how bad the economy in the US was during that time. You've probably heard of people like Eastman Kodak, Kodak Camera, and Ivar Kruger. They killed themselves during this period. The US economy hit all-time lows and recorded its highest unemployment rate ever up to that point. Deflation was destroying lives, families, and the morale of a nation. Governments feared deflation much more than they fear inflation. President Roosevelt wanted inflation, and the fastest way to do so was to reprice the gold they just nationalized from their citizens. By repricing gold, President Roosevelt brought inflation to the economy, and it worked. But before the US government did so, they forced their citizens to surrender their gold coins, bullion gold, and gold certificates to the government at the fixed price. Knowing they would reprice gold after they forced their citizens to surrender the gold, this became the greatest insider trading scheme ever seen in the world. And I believe this same government insider trading will come to many negative swap line nations. If you need a refresher on what negative swap lines are, please look at my video on dollar swap lines. Not only are governments in many parts of the world breaking under the debt and deflationary pressures in their domestic economies, they'll be forced to increase their take on foreign-owned gold mines. Those same governments will copy President Roosevelt's executive order of forcing all citizens to sell their gold coins and bullion to the government at the fixed price in their local currency. So, how does a bullionaire protect their wealth from being surrendered to their government? First of all, never flaunt or talk about your aspirations to become a bullionaire. You'll be a target from not just the government, but also your social acquaintances. Use cash that's not traceable in your local currency to buy gold coins or bullion. Don't use bank wires, checks, or credit cards, as all that will be traced from your bullion dealers. Storage is the biggest issue with becoming a bullionaire. Never have all your gold in one place. And I'd think twice about having too much in a bank safety deposit box. Remember that in 1933, all bank vaults were forced to close and be opened under the close supervision of government officials who checked all safety deposit boxes and their contents. If there was gold, it was automatically surrendered to the government at the fixed government rate of $20.67. And trust me, if it's happened in America, it will most likely happen in other nations. Now, let me tell you about the golden pocket. All that said, after the 1934 U.S. Gold Reserve Act, the gold miners that produce gold experienced their greatest period of free cash flow and dividends. And where we're at today, halfway through 2020, we're entering an incredible gold market. It will be volatile on both the upside and downside on the spot price of gold. Around the world, gold is already hitting all-time high prices in foreign currencies and is edging near to all-time high prices in US dollars. It'll truly be a bull market once the previous US dollar highs are in the rearview mirror. Within the next 5 years, gold will attract front page attention as it hits prices that we've never seen before. Silver and silver stocks will also follow gold's lead. And the returns in precious metal stocks will be absolutely nothing short of spectacular. I've seen it firsthand. But broken governments will want their share. This means you need to understand the political risks that are currently not being priced into the share prices of many of the mining and royalty companies' share prices. And for those who think they're untouchable because they hold gold bullion, just remember what happened to one of the greatest speculators that ever walked Wall Street, Bernard Baruch. Thank you for watching.